Hey guys, welcome to my channel. I'm Michael Studebaker, and this will be my first video on the channel. Today, we'll be talking about money management and everything you need to know. Step 1 is starting a budget, and this is done by keeping track of your expenses and cutting back on wants, impulse buying. Budgeting is a very important step to do as most people don't budget, so they aren't really aware of what's going on into their accounts and what's leaving. But by budgeting, you'll definitely be ahead of the curve. When you budget, this allows you to determine if the money you're spending is on needs rather than wants. The main thing that really hurts your chances of a comfortable retirement is impulse buying. By budgeting, it'll allow you to find the areas that you're spending unnecessarily on so that you can figure a way to reduce that spending. On average, it is recommended that people save 10 to 15% of their annual income so that they can retire comfortably. And having a roadmap to all your expenses and income, you can cut back on unnecessarily spending, making this goal very possible. Step 2, setting up an emergency fund. This is a very crucial step, I think, because it takes a lot of stress out of this equation, not having to worry about money when an emergency comes up. It's possible you won't need and use it, but it's better to be safe than sorry. Emergencies could range from unforeseen medical bills, car repairs, or home repairs. Every person should ideally have at least 3 to 6 months worth of living expenses saved. This can be calculated by looking at your budget, which would tell you what your monthly expenses are, and then multiply that amount by 3 to 6 times. 3 being on the lower side, and 6 being on the safer side. Step 3, tax deferral accounts. A 401k is a type of tax deferral account and should definitely be an option, in my opinion, only if the employer is willing to match your deposit amount. If they are, this should be taken as this is basically free money and it also doubles on your contributions. This is pretty much little to no risk at all, and the money you deposit into your 401k will allow you to get tax deductions on your tax returns, which is always a good thing. Another tax deferral account is the Roth IRA. This account allows you to deposit a maximum of $6,000 per year. And the best part is it's tax-free, meaning all the money you make from your investments in that account are not subject to taxes. However, this is a long-term retirement account, which means you would have to wait until you're 59 and a half years old to withdraw it tax-free. If you're investing or planning to invest, a Roth IRA is a very good option, as all the growth in the account as well as compound interest will be tax-free, unlike an individual cash account that's used for investing. Step 4, paying off high interest debt. This mostly consists of credit card debt, as they are known to have the highest interest debt, averaging at 17%, which is crazy. Basically, any debts that you have that are over 5 to 6% interest, I'd recommend to start paying that off as soon as you have completed the first 3 steps. You'll be really heading closer towards your journey to financial independence. Now, pay off these debts. There are 2 known methods to approaching this. The first one is the avalanche method, which is the preferred one that I recommend. As in the long term, this will save you more money as you won't have to deal with the extra costs from the interest rate. This method consists of paying off the highest interest debt you owe. Then once you've paid that off, you move on to the second highest interest debt, and so forth, until they've all been paid off. The second method is the snowball method. This is when you pay off the smallest balance you have, not taking into account the interest rates of your debt, and then moving up to the next largest balance. This is recommended for people looking for motivation, as seeing the account paid to 0 can be a motivating factor for some. Step 5, investing in yourself. After you've done all the other steps, you're now moving on to the exciting yet very essential step towards financial independence. I can't stress how important this is enough. Investing in yourself allows you to acquire new knowledge as well as skills that you can apply to something you have a passion for, whether it be investing, starting your own business, or even expanding your income streams. This can be done by buying books, attending seminars, taking courses, etc. Self-education is what will definitely lead you to be successful in whatever you're doing. If you're watching and are at the final step, start investing in yourself today. Don't wait till tomorrow, as this could delay or push back your goals. Consistency is key. Hard work pays off. Investing in yourself will allow you to find new ways to expand your income streams. By following these 5 simple steps, you're on track to a lifelong journey towards your financial independence. Thank you guys. And if you need to reach me, there's my email. Feel free to contact me if you have any questions. So I hope you guys enjoyed the content and found it useful. If you did, please subscribe, like the video, hit the notification bell if you want to see more content like this. And I hope some of you guys will use some of the stuff we talked about in the video in your everyday life and work towards your goals in future. Thank you guys. I'm Michael, and I'll see you guys in the next video.